Today, I'm revealing 3 reversal trading strategies for 2025 that have been rigorously tested and proven across all markets. Imagine shifting from the frustration of constantly drawing horizontal levels, unsure of when to enter or exit, to having a precise trading strategy in your hands. Our first strategy, we're diving into the power of the Fibonacci retracement tool, focusing on the golden pocket. This is a special zone identified by the Fibonacci tool, the sweet spot for major price reversals. This golden pocket sits between the 61.8% and 66% Fibonacci retracement levels, and it's renowned for its ability to pinpoint the most lucrative turning points. I know it sounds too good to be true, but it's straightforward and incredibly effective. I'm here to guide you through it all, step by step. Alright, time to hit the ground running. To learn all about this strategy, let's open TradingView first, and let's start with a clean chart. I've rigorously tested this strategy on the 5-minute Bitcoin chart over the last 7 months, and the results have been truly outstanding. This experience is what drives me to share it with you. But it's not just limited to Bitcoin. This strategy works wonders across multiple assets and timeframes. The strategy includes 2 indicators only. In order to add the first one, click on the Indicators tab and search for LuxAlgo sessions and click this one to add it to your chart. Now let's customize this indicator by clicking the settings. For this strategy, we only want to use session A, so make sure to disable everything except for the first session and the range option. You want to use the time from 8 a.m. to 7 p.m. Now click this button right here and change your time zone to UTC-4. We'll be using this session indicator to pinpoint the low and high points of the market. We'll especially focus on the sweeps of these levels, as they will serve as our first entry condition. This approach will help us identify the most opportune moments to enter the market. Now that we understand how this indicator works, let's add our second indicator to our chart. For the second indicator, we want to search for LuxAlgo price action concepts and click this one to our chart. Keep in mind, this is a premium indicator, meaning it requires a purchase to access its full capabilities. Now we need to customize our price action indicator. For this strategy, we're only going to be using the change of character labels and the fair value gaps. A change of character, or CHACH, sometimes also referred as market structure shift, is characterized by price breaking a prior swing low during an uptrend, which will then give us a bullish CHACH, or a prior swing high during a downtrend, which will then give us a bearish CHACH, and thus indicates a potential market reversal. The price action concepts toolkits labels 2 distinct types of CHACHs, the leading CHACH and a supported CHACH. We're going to be using both types for our strategy. We'll be using the bearish ones to identify short entry signals and the bullish CHACHs to identify long entry signals. Fair value gaps, or FVGs, are market imbalances formed from a sequence of 3 candles where the outer candle wicks fail to overlap the central candle body. The range between the wicks highlight a fair value gap. Bullish fair value gaps occur when the current price low is higher than the price high 2 bars ago. Bearish fair gaps occur when the current price high is lower than the price low 2 bars ago. Now on to the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably, and let's first start with the rules to enter a short trade. For a short entry signal to be valid, there must be 3 conditions met. First, we need to see the previous session high being swept. Second, we must wait for a bearish change of character label being printed. Third, we must wait for a bearish fair value gap being printed. If all conditions are met, we want to enter our short trade at the bearish FVG. Now listen carefully. We want to draw a Fibonacci retracement from our entry candle to the previous session low, and we want to use the levels -2.272, 0.618, and 0.66. We want to set our stop loss at the negative level, and we want to take profit as soon as price action hits the golden pocket. For another short trade opportunity to be recognized, we'll look for 3 key conditions. Firstly, the sweep of the previous session's high is essential. Secondly, we need to identify a bearish CHACH label appearing on the chart. Thirdly, the appearance of a bearish FVG is crucial. Once these criteria are fulfilled, our entry point for the short trade is at the location of the bearish FVG. Here's the next step. We're going to draw a Fibonacci retracement from our entry candle down to the previous session's low. We'll focus on the retracement levels of -2.272, 0.618, and 0.66 for precise entry and exit points. Our stop loss is positioned at the minus level, ensuring we minimize potential loss while making sure our trade won't be closed by a stop loss hunt, and we aim to exit the trade, taking profits when the price action reaches the golden pocket, which is a key area for reversals. The exact opposite is true for entering long trades. For a long entry signal to be valid, there must be 3 conditions met. First, we need to see the previous session low being swept. Second, we must wait for a bullish change of character label being printed. Third, we must wait for a bullish fair value gap being printed. If all conditions are met, we want to enter our long trade at the bullish FVG. We want to draw a Fibonacci retracement from our entry candle to the previous session high, and we want to use the exact same levels we are using for short trades. We want to set our stop loss at the negative level, and we want to take profit as soon as price action hits the golden pocket. For another long trade opportunity to be recognized, we'll look for three key conditions. Firstly, the sweep of the previous session's low is essential. Secondly, we need to identify a bullish chalk label appearing on the chart. Thirdly, the appearance of a bullish FVG is crucial. Once these criteria are fulfilled, our entry point for the long trade is at the location of the bullish FVG. Here's the next step. We're going to draw a Fibonacci retracement from our entry candle down to the previous session's high. We'll focus on our retracement levels for precise entry and exit points. We put our stop loss at the negative level. This way we make sure quick market changes don't kick us out of the trade too soon, and we are going to close our trade in profit as soon as the price action reaches the golden pocket. Alright, now let's dive into our second strategy, where you'll discover one of the most accurate scalping techniques I've tested on my channel so far. This method is probably something you've never seen before, so make sure you stay focused and pay close attention to all the details. I have tested this strategy 100 times manually on the Euro-USD chart on the 5-minute time frame. For the backtesting, I have used an app called Trader Edge. This was to ensure the strategy is profitable over a longer time period. I have found these 100 trades within a period of 5 months. By the end of this video, I am going to show you the backtesting results. I'm going to give you a bunch of examples on how you should place trades using this strategy, and also teach you a new money management trick that will instantly make you massive profits from any market. So without further ado, let's get straight into it. Traders, before we start, be sure to like this video and subscribe to my channel. Okay, so first of all, let's open TradingView.com and set the time frame to 5 minutes. This strategy can be used on all time frames, including a daily chart. The next step will be to click on the indicators window. Now, we're going to need to add 3 indicators to the chart. For the first indicator, let's search for signals and overlays. It's going to be this indicator right here. Access the indicator settings by double-clicking on it, set both the signal mode and candle coloring to confirmation, and set the autopilot sensitivity to short term. This is going to be our main confirmation indicator. Based on these signals, we're going to be placing buy and sell orders. For the second indicator, search for price action concepts. Access the indicator settings, set both the internal and the swing market structure to BOS, enable order blocks, and also enable the internal buy and sell activity. This indicator shows the areas of support and resistance and the break of structure levels. Usually when the price action is in a downtrend and it reaches a bullish order block level, the market tends to reverse. The opposite happens when the price action reaches a bearish order block. Notice the price action was heading upwards, then it reached the level of resistance, and it started selling off. These levels are very important because they will dramatically increase the win rate of our first confirmation indicator. And finally, to complete the setup, we need to add one more tool. This indicator is called Oscillator Matrix. Now let's access the indicator settings. Within the inputs, we want to disable everything except for the money flow. Now we want to click the thresholds and set its opacity to 0%. In the style section, change the levels to 60 and 40, change the color of the lines to white, and change the line type to line. The main goal of this indicator is to identify the times when the market is overbought or oversold. When money flow crosses above the 60 level, the market is considered overbought. When money flow crosses below the 40 level, the market is considered oversold. Okay, now let's learn the exact conditions for entering long and short trades. So, the conditions for entering a long trade are as follows. First, the price action must fall back into the level of a bullish order block. The candlestick should either touch it or get really close to it, but it must not cross and close below it. If the price does not respect this level, the trade will automatically be canceled. Second, the indicator must issue a buy or a strong buy signal. And finally, at the time the signal was issued, the money flow index must be green colored and not higher than the 60 level, or if it's red colored, it must be below the 40 level. If these conditions are met, a buy order will be placed at the close of the trigger candlestick. The stop loss will be placed slightly below the order block. Now, listen carefully. When the price action reaches a risk-reward ratio of 1:1, you're going to have to take half of your position off. Once you've done that, you have to move your stop loss to the break-even. And now you're going to set the take profit target for the second half of your position at 2 times the risk. Now let me show you how I'm going to be doing the backtesting. So first of all, I'm going to set the initial account size at $1,000. The risk per trade will be set at 2%. And now, I'm gonna need to add 2 take profit levels. And since I'm taking half of the position off when the price action reaches the first target, I'm gonna have to set the position percentage at 50%. When the price action reaches a risk-reward ratio of 1:1, 2% of profits will be added, and Trader Edge will automatically take half of the profit off. And when the second half of my position reaches the second target, which is 2 times the risk, I'm gonna add the profit too, which is 4%. We can see that the total profit per trade is 3% or $30, but this is only the case when the price action reaches 2 targets. More often than not, you will have a situation when the price action reaches your first target and then it reverses and hits your stop loss. Here's another example of a really good long entry. We see the price bounced off the order block, the indicator issued a new buy signal, and the money flow was confirming our entry signal. Alright, now let's understand the rules for entering a short trade. First, the price action must pull back into an order block, which is located above the price action. The candlestick can either touch it or get really close to it. Second, the signals and overlays indicator must issue a sell or a strong sell signal. And at the time the signal is issued, the money flow index must be green and overbought or red and not oversold. The stop loss will be set slightly above the order block. And again, when the price action reaches a risk-reward ratio of 1:1, you're going to have to take half of your position off and move your stop loss to the break-even. Then set the take profit target for the second half at 2 times the risk. Okay, let's see a couple more examples. So here we had the market rejecting off of the order block and the indicator issued a signal to sell. The money flow index is confirming our entry signal. We see the market reach the first target, but unfortunately the stop loss on the second half got triggered. Here we have another valid short entry. The market reached an order block and the sell expression became very significant. We also had a signal to sell and the money flow index was confirming. The win rate for the strategy turned out to be 77%. This is literally one of the most accurate strategies on my channel. The total profit is $4,451.20. The profit factor is 4.78. The biggest winning streak we had was 14 wins in a row. So overall, really happy with the results. Definitely give this strategy a try on different time frames and different markets. Now that we've covered the key rules for entering both long and short trades with this strategy, it's time for the third and final strategy. This strategy might be the most effective way to trade the 1-minute time frame. I've tested this strategy on a variety of assets, from Bitcoin to major forex pairs like Euro USD and stocks, and the results were shockingly good as the winning ratio sometimes reached 90% and above. As an example for today's video, I am going to use Bybit's BNB USDT chart. The strategy is very simple and is based on reversal trading using only one indicator, which is called LuxAlgo signals and overlays. To trade it profitably, you need to follow 3 rules, with the last one being the most crucial. In this short tutorial, I'll show you how to build the same setup as well as the strategy's entry and exit rules. Without wasting any time, let's get straight into it. To apply the indicator to the chart, open the Indicators tab and search for LuxAlgo signals and overlays, and add this one to your chart. Let's first customize our indicator. First, for the presets and filters, we want to use none. For the signal mode, you want to use none as well. You can leave the signal sensitivity by default and either use the candle coloring set to confirmation and exits or none. It doesn't matter for today's strategy. Now for the indicator overlays. For this strategy, you want to enable the reversal zones and leave the reactivity by default set to 3, and you want to enable the trend catcher and leave its reactivity by default as well. Now let's learn the complete rules for buying and selling with this strategy. To initiate a buy trade, 2 conditions must be met. First, you want to wait for the price action to bounce off the lower reversal zone. The lower reversal zone is this band right here, which is usually colored in green by default. I just changed the colors to blue. For a bounce off to be valid, at least one candlestick needs to touch or enter the band with its wick or candle's body, and then completely exit this band. For the second condition, you want to see the trend catcher line changing its color from red to green, just like this. As explained earlier, the color of the candlestick can either be purple, green, or red. It doesn't matter for our strategy. And finally, you want to open a buy trade at the close of the candlestick if these conditions are present. And now here's where the third rule comes into play. For the stop loss, you want to use the recent swing low and place it slightly below. And for taking profit, you want to use a fixed take profit target with a risk to reward ratio of 1 to 1.5, just like this. And this one's a winning trade. Moving on, let's take a look at a sell trade example. To initiate a short trade, 2 conditions must be met. First, you want to wait for the price action to get rejected off the upper reversal zone. The upper reversal zone is this band right here, which is usually colored in red by default. I just changed the colors to purple. For a rejection to be valid, at least one candlestick needs to touch or enter the band with its wick or candle's body, and then completely exit this band. For the second condition, you want to see the trend catcher line changing its color from green to red, just like this. As explained earlier, the color of the candlestick can either be purple, green, or red. It doesn't matter for our strategy. And finally, you want to open a sell trade at the close of the candlestick if these conditions are present. And now here's where the third rule comes into play. For the stop loss, you want to use the recent swing high and place it slightly above. And for taking profit, you want to use a fixed take profit target with a risk to reward ratio of 1 to 1.5, just like this. This one's a losing trade, so let's wait for another setup to come into play. So as we can see here, we've got another sell trade opportunity. The price action entered the zone and got rejected off the upper reversal band. And now for the second condition, you want to wait for the trend catcher line to change its color from green to red, just like this. And now you want to open a sell trade at the close of the candlestick as our conditions are present. Now set your stop loss slightly above the recent swing high. And for taking profit, you want to use a fixed take profit target with a risk to reward ratio of 1 to 1.5, just like this. Traders, if you like this trading strategy, don't forget to like this video and subscribe to my channel. And this one's a winning trade. And here we've got another buy trade opportunity. The price action entered the zone and bounced off the lower reversal band. And now for the second condition, you want to wait for the trend catcher line to change its color from red to green, just like this. Open a buy trade at the close of the candlestick as our conditions are present. Set your stop loss slightly below the recent swing low and target a 1 to 1.5 risk to reward ratio for your take profit level. You can test the indicators 30 days risk-free using the link in my bio for up to a 20% discount, or to save up to 50%, take the annual plan. Make sure to thoroughly understand and backtest this or any other trading strategy you pick up from YouTube before risking your own capital. If you want to learn my best strategies for trading Forex, cryptocurrencies, and stocks, check out one of these videos.